So I believe that many of you are here today because you want to create another source of income for yourself, trading the financial markets from home and anywhere in the world, in fact, right? And to create a source of income that is recession-proof, that's pandemic-proof. So today I'm going to share with you what it takes to become a consistently profitable trader, and in fact, how you can even trade for a living eventually. So take lots of notes, and if you got questions, you can type your questions in the chat box. I can see your questions, and at the end of the webinar, I'll do a Q&A. So I'll do my best to answer as many questions as possible. But I also have my team that's going to help to answer questions along the way as well. All right. So with that, let's begin. So for those of you who attended my first webinar on investing, the focus was on building wealth, compounding wealth for investing. Now, if you have not watched my webinar on investing, please watch it. You can watch the replay on the blackmarket.piranhaprofits.com website. I repeat, it's blackmarket.piranhaprofits.com. You can watch the replay of my first webinar on investing. So the main objective of investing is really to just save your money and let it compound over time to huge amounts of money so that you can be financially free, financially secure from the rat race in the near future. All right. And many people that think that to invest, you need to take high risk to get high returns. And if you watch my first webinar, you know that's absolute rubbish, right? In fact, you can get high returns with very low risk if you know how to invest in fundamentally very good businesses. So my approach is, I keep saying I'm very conservative. I only invest in the top 1% of companies in the world that are fundamentally strong. And if you buy a portfolio of great businesses and buy them when they are less than what they are worth, when they are selling for less than what they are worth, when they're undervalued, it is impossible to lose money. It's impossible to lose money, right? So you can actually invest in a very safe way, in a very stress-free way. And again, if you have not watched, check out my first webinar, right? So that was on investing. Now, for today's webinar, it's going to be on swing trading. And again, the purpose of swing trading is different from investing. Investing is accumulating and compounding wealth over time, right? But for trading, our focus is on generating short-term profits from generating cash flow from the markets. So what's the purpose of that? Well, two reasons. Now, one reason is we can generate cash flow and use that cash flow to invest into great companies, right? Now, many of my students, myself included, we do both investing and trading. So I've got two portfolios, investing and trading, right? So from trading, I generate short-term profits and cash flow, and I use part of that to put it into my investment account to buy even more great companies when they are underpriced. At the same time, from the short-term profits, it can be used to pay your expenses, either part of your expenses or all your expenses, right? Eventually when you can generate enough, okay? So let's focus on swing trading for this webinar. Now, a lot of people ask me, Adam, I want to trade for a living. I want to trade full-time, like many of your students. And how much capital do I need to do that? So it depends on two things. The first thing is it depends on how high your expenses are, your lifestyle. So if you have got a very, extravagant lifestyle, you've got a private jet, you've got many mansions, right? Then you've got high expenses, you're going to need a lot of capital to generate the cash to pay your expenses. It's going to take a lot for you to trade full-time, right? But if you have got reasonable and modest expenses, you live modestly, then lower expenses, easier to trade for a living because you need less capital. Follow so far? The second thing it depends on would be your skills. What returns can you achieve on your capital? Of course, the more skillful you are, you can get higher returns on your capital. So you require less capital, right? So let's take a look at some numbers right now. So let's assume, for example, now I'm from Singapore. So in Singapore, many people tell me that, hey, I need at least 5,000 a month to survive, monthly expenses. So $5,000 a month, that would be $60,000 a year in expenses. Again, this is just an average. Some of you will need a lot more, some of you need a lot less. Let's take this as an example. Now, if you don't have the skill to trade the financial markets, then the only way to create income from your capital is to put it into the bank and get interest, right? That's the total no-brainer way if you've got no skills. Now, if you put it into the fixed deposit, how much capital do you need to generate 60 grand a year? You need a lot of capital. Why? Because the bank deposit rate is now less than 1%. It's like 0.2% in Singapore or 0.1% in the US, right? Now, eventually, good news, interest rates will rise. But no matter how much they rise, they're not going to rise that much, right? So even if interest rates go up to 1% a year, how much do you need? Well, you take 60,000, divide by 1%, that gives you $4.8 million. So if you don't know how to trade, then you need $4.8 million, put it into the bank, you get 1% interest, you get 60 grand a year. Yes, you don't have to work anymore, right? But of course, that's like crazy, it's too much, yeah? Now, what if you buy dividend stocks? Now, there are some stocks that they just pay dividends, right? Like 3M or Lockheed Martin. These are dividend kind of stocks, all right? Now, in the US, even if you look at the high dividend paying stocks, they average about 3% a year in terms of dividend yield, only 3%, right? So again, if you take 60,000, which is what you need a year, right, to live, divide by 3%, you still need $2 million if you buy stocks and get dividends. Now, those of you in Singapore, we get a bit higher yields. If you invest in Singapore REITs, for example, real estate investment trusts, or you invest in Singapore banks, you get a bit higher, like 4 to 5% dividend yield, right? But even then, you still need about $1.5 million. So you need a lot of capital again to generate the kind of cash flow, right? Now, the good thing is when you learn the skill of how to trade the financial markets, then you should be able to achieve on average about 5% return a month, right? On average, 5% return a month. Now, some people say, but Adam, I've heard other traders able to achieve 10% a month, 20% a month, right? Yes, there are traders who are more aggressive. They take high risk. They can get 10, 20% a month, or they are very, very experienced, okay? Yes, there are, but I would rather look at something more conservative and not aggressive, more conservative, more reasonable. So I'll say 5% on average is reasonable, okay? So if you can get an average of 5% a month, okay, how much capital do you need? Now, again, this 5% is not a year, it's a month. It's a month, right? So you look at the monthly expenses, 5,000, okay, and you divide it by 5%, what do you get? You get 100 grand. There you are, right? So in other words, you've got $100,000, okay, on average, you're generating about 5,000 a month in trading profits. Now, again, it's an average. In reality, you can't get exactly 5% a month. It doesn't work that way, all right? So some months you may get 8%, some months you may get 1%, some months you may get 10%, some months may even be negative, right? So understand that in trading, it doesn't mean that every month you will make money. No, you may have losing months. It's part of the game. But if you average it out, a 5% return a month is reasonable, all right? And I'll show you the mechanics of how that is achieved later on. Now, next question people ask would be, okay, Adam, now to trade to get average 5% a month, okay, how much time must I commit? Now, what do you think? I want to type your answer on the chat box. To be able to trade profitably and to even trade for a living, how much time do you think you need to trade a day? Type your answer. Is it like 10 hours, 20 hours, 5 hours? What do you think? All right, so some people say 4 hours, some say 3 hours, some say 1 hour, 2.5 hours, okay? Now, it really depends on your trading style, okay? So, for example, some people are day traders. So day traders means they go in and out within a day and they have to stare at the screen. Now, I used to do day trading many years ago when I was younger, right? But since I got married, I got kids, I've got no time to do day trading. And in day trading, yeah, you need like 4-5 hours a day. And I used to think that the more you trade every day, the more time you spend, the more money you get. Rubbish. That is totally rubbish. That's one thing I've learned over the years. So today, the way I trade is I'm a swing trader, which means when I trade, I don't get in and out within one day. I hold the position for at least 2-3 weeks or even a month. That's a swing trade, all right? So the good thing about swing trading is you don't have to spend much time. For me, on average, on trading, I spend 1 hour a day. That's it. 1 hour a day. In fact, later you'll hear from some of my students who'll be sharing their own results, and most of them will tell you the same thing. They spend 30 minutes to 1 hour a day. That's it. Okay. So I repeat, you can actually trade full time. You can trade for a living with just an hour a day. So that means that you still have 23 hours left every day. Minus your sleep, you still have 17 hours. What are you going to do? So the good news is I tell people that once you learn how to trade and you can generate enough profits from your trading, you can still do other things. You can still have a job which you love. You can start another business that you love for the fun of it, and you can still earn extra income. Okay, so you can create actually multiple sources of income. Now, when you first start trading, of course, as a beginner, you need more time. You need maybe 3 hours or 4 hours at the beginning because you're not familiar, right? But once you get the hang of it, once you get the routine, trading becomes very mechanical, very boring, and an hour a day, that's it. All right, so just bear that in mind. Now, the other thing people say would be, Adam, you said I need $100,000, all right, to trade for a living. I don't have $100,000, it's too much, okay? Now, again, this may not happen overnight, okay? So I know some of you may only have 2,000 to start, or maybe 3,000 or 5,000, and that's fine. So the point is, start small, all right? Start small and slowly build up your account size, your capital, until you reach, again, $100,000. And you know that once you reach about 100 grand, you can comfortably achieve about, 60,000 a year in trading profits on average. Okay. Now, one thing I would really recommend to you is this: don't rush. Okay. If you are newbie and you've never traded before, focus on acquiring the skills. It's like, trading is no different from being a lawyer or a surgeon or an architect. You need to learn, you need to practice. Or being a pilot. Let me ask you this: if you go to flying school, all right, and you learn how to fly, do they allow you to fly the plane immediately with passengers? No, they put you into a simulator, all right, and you're gonna take off and land, and you may crash a few times initially in the simulator, but no one gets hurt. Only when you can land successfully, take off, then you fly the real plane, correct? Now, the same thing is true of trading. The problem a lot of people have is they want to rush in to make money. So the moment they learn some things on the internet, they rush in, they start to trade, they end up losing money. It's like a pilot, they take the plane up the first time, but they're not familiar and they crash the plane. So when you first start, paper trade first. Do not use real money. Paper trade with virtual account only when you can make money consistently, then you use real money. So, all right, don't rush. Make sure you go step by step. All right. Now, then when you use real money, start small. Start with 3,000, 2,000, and then you slowly build up your account, and that's how you build your skills. And once you reach like 100 grand, 200 grand, then you'll be able to trade for a living. All right. So you have to go through the process. You can't rush the process. You follow me so far? Okay. Now, let's move on. The next thing I like to share is this. Now, one reason why a lot of people fail in trading is because they come in with the wrong expectations, and the wrong belief systems. Okay. So I want to tell you about the reality about trading and to cut a lot of the bullshit that's been told to us by some gurus or the media, right? They distort our thinking about what trading is really about. So what are the common myths people have? Myth number one, many people think that to be a successful trader, you must be able to predict where the stock price is going to go in the next 1 day, 1 week, 1 month, or even 3 months, right? Let me ask you a question. Do you think that successful traders can really predict where the stock is going to go in the next 1 day, 1 week, 1 month? Yes or no? Honestly, do you think they can predict? Type your answer, yes or no. Okay, great. All of you say no. You are enlightened. Hey, I've got a few yeses, all right? The answer is no. No one can. Now, think logically, okay? Every day, the stock price goes up, down, right? Now, what makes the price go up and down every day? Is demand and supply in the market. If there's more demand than supply, price goes up. More supply than demand, price goes down, right? So it's the buying and selling of millions of people that drive the price every day. Now, do people buy and sell based on logic or emotions? Logic or emotions? I can tell you that for the majority of people, their buying and selling is driven by emotions, fear and greed. When people are greedy, they buy, right? Fearful, they sell, right? And emotions can change very fast in the market because of news. Because like a few days ago, people are like, oh, greedy, the market's going up, right? And then suddenly now this Omicron variant virus, oh my God, it can scared and sell, it comes down, right? So news, emotions drive prices every day, up and down. Now, let me ask you this question. Can you predict tomorrow's news? Can you predict the news next week or next month? Of course not. So if you can't predict the news in the future and you can't predict the emotions of people, how can you predict where the price is going to go? It's ridiculous, right? I don't know about you, but I've been married for 21 years and I can't even predict my wife's emotions the next day. My wife can go to bed really happy, smiling, laughing. Next day she wakes up, her face is black, she scolds me. All right. So if I can't even predict one woman, how do you think I can predict the emotions of millions of people in the world buying and selling? It is impossible. All right. So the moment you realize that you can't predict the stock market and no one can predict the stock market, that is when you free your mind from the matrix of the markets. As long as you think that people can predict the stock market, you'll be trapped going in circles all your life. Okay, so what's the reality? The reality again is no one can predict where the price is going to go with certainty. All we can do as successful traders is we can only identify high probability trade setups. So by reading the chart patterns, by reading technical analysis, by reading trends, support and resistance, we can tell, is the price more likely to go up or more likely to go down? So again, it's a probability. It's only a probability, it's not 100%, but we can't predict 100%. Follow me so far? So you can find a trade with all the right technical patterns and it can still go down, right? Because it's part of the game, it's a probability, understand? Right? So because of that, in trading, you must always have stop losses. You must always account for the fact that any trade can be a losing trade. And you got to cut loss early, and any trade can be a winning trade, so you must know when to take profits. That's how you become a responsible professional trader. And not saying it's gonna go up, it will sure to go up. Okay, no, okay, no such thing, yeah? Okay. Myth number 2. People think that to be a successful trader, you win all the time. You got high win rate. You win 90%, you win 80%. Is that true? Not really. I can tell you that for stock trading, let me emphasize this properly. For stock trading, I can tell you that successful traders, they only win 50 to 60% of the time. In fact, if you trade stocks and you can win 60% of the time, you are among the best traders in the world. I know many professional traders who would sell their grandmother to get a 60% win rate. Yeah. So don't think that you can get 80% or 90% with stocks. You can with options, and we'll talk about it later on, right? But I'm saying for stocks alone, 50 to 60%, you're already really good. All right. Now you may say, but Adam, if I only win 50% or 60%, how do I make money? So the secret of profitable trading is not about having a high win rate. No. The secret of profitable trading is about managing your risk to reward ratio. In other words, to ensure that when you lose less. When you win more. So when you win more when you're right, you lose less when you're wrong, you still make money consistently because the wins more than make up for the losses. Understand? All right. And the second key to successful trading is about position sizing. Another way of saying money management. That means every time you trade, you only risk a small percentage of your capital. Like you only risk 1% of your money on any trade, or at the most 2% of your money. Why? Because again, in trading, you can have losing streaks where you have many losses in a row. Happens to everyone. Okay, you're going to have winning streaks as well. So when you risk a small percentage of your capital, and when you go through those losing streaks, it won't kill your account. You can make it back very fast. But if you risk 20% of one trade or 30% of one trade, and you got 3 or 4 losing trades, goodbye, Charlie, you blow your account. And that's what happens to a lot of newbies. They risk too much. Follow me so far? All right. So the next question is this. How can we ensure that we get a high win rate, that we are right more than we are wrong? Again, we can't predict for sure, but how do we make sure that the odds are in our favor, that we get a high probability of the price moving in our direction? So to do that, we use certain ingredients, right? But before that, let me just show you this example of what I mean. All right. Now, let's say you do an average of 10 trades a month. Now, again, a lot of people think that to be trading for a living, you have to trade every day. You have to take many trades every day. And that's, again, total nonsense. Many top traders I know, many professional traders I know, they do no more than 10 to 20 trades a month. That's it, 10 to 20 trades a month. Okay. So one thing you have to understand about trading is that quality is more important than quantity. It's not how many trades you take, it's the quality of the trades you take. And many traders make the mistake of forcing a trade, where they say every day I have to take a trade. No, if there's no good trade, if there's no high probability setup, don't trade. Let the trade come to you. Don't force a trade. And I can tell you that there are not many top quality trades that appear every day. So there are days when I don't trade at all because there's no good trade. But on days when I get good trades, I take those trades. All right. So again, let's say you take 10 trades a month. That would be 120 trades a year, right? And let's assume that you're not too skillful when you first start. So your win rate is only 50%. Over time, it will improve, but let's say you start with 50%. Yeah. And let's assume that when you take a trade, you risk 1% of your capital. Okay. Remember, in trading, when you enter a trade, you always put a stop loss. So if the price goes down, hits a stop loss, you cut loss, you get out, and you lose 1% of your money. Later, I'll show you how to calculate the number of shares to buy so that when it hits the stop loss, you always lose 1%. Now, once you put a stop loss, you have to put a profit target. And you want to ensure that you take profit not too early. You only take profit when your profit is double the initial risk. So that when it's a winning trade, you get 2% return on your capital. Right? Okay. So assuming you follow these rules, you follow the trading plan. Yeah. So if you got a 50% win rate, what does it mean? It means that in a year, out of 120 trades, you get on average 60 winning trades and 60 losing trades, correct? Now, the thing about trading is that you don't always get one win and one loss and one win, and it doesn't happen that way. You could have win, 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 win first, and then loss, 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 and then win, right? So it comes randomly. You have no idea when the wins and losses will come, okay? So out of all the trades, let's say, 60 trades, you lose, and each time you lose 1%. So that's minus 60%, okay? And every time you win 2% return. That's 120%. So net, that gives you 60% return a year. Divide by 12, that's 5% a month. So that's how we get an average of 5% a month based on this trading plan. Does this make sense? You follow? All right. Now, some people say, but Adam, I don't want to have losing trades. I only want winning trades. Is that possible? No, it's impossible. Losing trades are part of the game. You got to have losing trades. You got to have winning trades, right? So I tell my students that don't treat trading as gambling, but treat it as a business. Now, let me ask you a question. In any business, what do you have in any business? In any business, you always have sales revenue, right? You have sales, and you got to have cost, right, of the product, right? We call that cost of goods sold, COGS. So sales minus cost of goods sold gives you the gross profit, right? Gross profit. A bit hard to write with my trackpad, but doing my best, right? Gross profit, right? And then you minus your operating expenses of the business, like salaries, rentals, utilities, and then you get your net profit, correct? So that's a business. Now, let me ask you this. If you have a business and you're selling shoes, and each shoe sells for $300 per pair, and when you sell the shoe, the cost of the shoe to you is, say, $150. So what's your gross profit in this case? Your gross profit is $150, right? What's your profit margin for this business? What's your gross profit margin? Can someone tell me? Of 300, you keep 150, and 150 is the cost, right? Your profit margin is 50%. Is that a good profit margin? It's not bad, right? Now, so the same thing in trading. So notice that in trading, when you get a winning trade, you get 2%. Losing trade, you get 1%. So this is like your sales. Winning trade is like your sales, and losing trade is like your cost. So even at a 50% win rate, it's like every sale you make, you got a cost. And what's your profit margin? 50% as well. So trading's a good business, 50% profit margin. Now, but the good thing about trading is you don't have operating expenses. You don't have to pay your staff. You don't have to pay rental. You don't have to pay utilities. There's no inventory, right? So it's pure profits, 50%. So when you think about it this way, you don't get upset when your trade hits the stop loss. You don't say, oh, why did I lose? No, you don't get upset because you know that, hey, it's part of the cost. Make sense? So when you think that way, you don't trade with anxiety. You don't trade with frustration. You trade in a very zen way, right? You win one, you lose one, you win one, you lose one, and that's business. And you make money at the end of the day as long as you win more when you're right, you lose less when you're wrong. Does this make sense to you guys? All right. Now, question. What are three ways you can increase your returns? Now, again, if you do this, you get about 5% a month. But how could you actually increase your returns? Any suggestions? Type your answer in the chat box. Let me take a look. Increase your sales. Yeah, how? How do you increase your sales? Leverage, options. We'll talk about options later. Yeah, increase your RR, trade more, take more trades. Okay. So there are 3 ways you can increase your returns. The first way is to increase your risk per trade. So instead of risking 1% of your money each time, you risk 2%. Right? But of course, by risking 2%, now your winning trade, instead of getting 2%, your winning trade will be a 4% return because you're always risking $1 to make $2. Make sense? Okay. So if you increase your risk per trade, what happens? Then your 60 losses would lose 2% each. Okay. And this would be minus 120. Right? And your winning trades would be 4% gain per trade. So that becomes 240%. Right? So you take 240 minus 120 gives you 120% a year, which is about 10% a month. So that's one way you can do it, by increasing your risk per trade. That's one way, right? Another way is to increase your win rate. So instead of winning 50%, you win 55%, you win 58%, you win 60%. And the only way to increase your win rate is to get more skillful, to learn, to develop your skills to identify high probability trades. So later I'm going to show you what makes a high probability trade so that we got a much higher win rate. Okay. The third thing you can do, oops, why does that keep happening? Okay. The third thing that you can do is to increase the number of trades. Instead of taking 10 trades a month, you take 20 trades a month. Okay. And that will increase your returns as well. But be careful about that, because I keep teaching my students that never force a trade. Never say to yourself, I must take 1 trade a day. I must take 1 trade a week. Or no, because that would cause you to take low quality trades. So only take a trade when all the stars are aligned. High probability trades. If you want to catch my latest videos, click on the subscribe button right now. Click on the bell so you get instant notifications once I upload my latest video. If you want to check out my online courses, go to piranhaprofits.com. We're going to learn how to invest and how to trade the financial markets and create an income from all around the world. If you want to join my live Wealth Academy program, go on to wealthacademyglobal.com and find out more about how you can learn investing and trading live online. This is Adam Khoo, and may the markets be with you.